Hello, everybody. Welcome to this video at our business summit here. I am Bill Marshall, and today I am talking with Orlando from Aspira Brokers, and we're going to be talking about buying and selling businesses. So, Orlando, thanks for joining us.
Thanks for having me.
Great. So, first thing I want you to do is tell us a little bit about yourself and, what Aspira Brokers is, and also a little bit about buying and selling, kind of like a general overview, and then we'll get into it.
Sure. So I joke I'm a recovering attorney. I feel like enough years I've been away from practicing law that I'm fully recovered from the practice of law. So I'm formerly an attorney at a small law practice. Trained as an attorney, trained in accounting for my CPA. More an entrepreneur at heart, though. And so I've done a lot of different things, including starting a business from a kitchen table and growing that with someone else and helping that person grow it to a multi-million-dollar company with clients coast to coast. Later, had the privilege of being able to sell that business. So in any event, Aspira Business Brokers and Advisors is a brokerage and advisory firm. There's two brokerages. The business brokerage helps to buy and sell privately held businesses. That represents Main Street businesses, the typical businesses you see every day, whether it's the laundromat, the auto body shop, liquor store, supermarket, you name it. We also represent lower middle market businesses, which can really be anything, but they just happen to have a higher revenue. Typically $1 million in EBITDA and above, which means they just net $1 million in their tax return once you adjust it all out. We also are a real estate brokerage. And lastly, in the real estate brokers, actually, we do commercial and residential. And then lastly, on the advisory side, so the first two are, of course, commission-based, success fee-based brokerages. But the third is the fee-based service. So as an advisor, a la carte, you can hire us to determine the value of your business, what the most probable sales price might be, how to prepare your business for sale. If you're thinking about that in the next, say, 2-3 years, or even 18 months even. And even helping with financing. So there's a lot of things we can help on the advisory consulting side, but that's the short and sweet of it.
All right, cool. Now give us a general idea of, if someone's buying or selling, what are different stages they might go through, or different things that they should expect or have ready before they're actually thinking of doing a buying or selling.
Yeah, so on the selling side, if you're a business owner, you definitely need to get your house in order. The obvious and common sense stuff that we even talked about before recording is, getting the finances in place. So you have to have strong financial controls. Typically, that means working out of QuickBooks or some type of accounting system. You keep regular bookkeeping on a weekly or monthly basis, at least. Your business should be profitable because ideally, when selling a business, we use the income approach to valuation. So the business is going to be sold based on the income it provides to you, and realistically, will be providing for the new owner as a buyer. So that's what a buyer is buying when they're buying your business. They're buying that income, and they're buying the lifestyle. They're buying what you have built and the thing that you're doing that they may love too, whether it's in hair and salon or whether it's a bakery. They're committing to both. So they need both to be present there. So with that said, listen, simple statement, but that it's very complex. The seller has to understand, for example, that when you're building a lifestyle, if you have a business that you're working 24/7 and doing everything yourself 7 days a week, that's problematic. It's not as sellable. It's not as attractive. So you do need to put management in place or have good employees that you can delegate so that you can manage it with more reasonable hours. But also things has to be put in place so that when you leave, things are not going to fall apart, right? Sales are not going to fall apart. Employees are not going to leave and move on. Customer base is not going to move on. You're going to have everything put in place. It's a system. It's a model, a business model that you're using. And listen, ultimately, here's the test. Ultimately, if you can build a business that you can walk away from and take a 1 month long vacation, and when you come back, it's still looking just as good as when you left, you have a very sellable business. So that's the
Oh,
test, and that's the litmus test, I think, to kind of put in common sense. Like just everything else, all the details, I think you can fill in the blanks, right? If you can do that, if you can't do that, then we got to figure out why you can't, and those are the issues that are going to suppress value and sellability of the business. On the buying side, look, you need to do a personal evaluation. You need to figure out why you want to become a business owner and entrepreneur. And when those type of feelings are just nagging, they never leave you, then you probably need to pursue it and put some effort into it. You obviously have to have some type of cash or liquidity, something. You need to have some type of credit worthiness, and you clearly need to have transferable skills and experiences that you've already proven, whether you've already done it for another employer or you've done it in other type of side gigs, what have you. These things should be present so that when you go out there and buy a business, you have a high probability of being very successful. Listen, entrepreneurship, there's no, we all know this, right? Just to be clear, entrepreneurship, there's no guarantees. And by the way, there's no guarantees in your JOB either, right? You can be fired at any moment. You can be downsized. Your hours can be changed. You can literally be asked to do something that you're not comfortable with. There's no guarantees in the world. Just everyone, whether you're interested in being an entrepreneur or not, just remember that. Just keep that in context so that when you're balancing out your options and you're nervous or hesitating on exploring the entrepreneurship, that goes back to that personal assessment. If you feel like you can rely more on yourself and your potential, and you feel like there's a lot more there, you want to take advantage of that, then it's time to make that effort. And I got to tell you, I'm a big proponent of what I do because I believe in it, that it's much smarter to acquire an existing business that's already profitable, already established. Everything's there. You can just come in there and take it hopefully to the next level. That is much smarter. Your risk is reduced. Your cost actually starting from scratch versus buying something existing. Listen, I think I've heard or even read a couple articles about how more expensive it is to buy an existing business. That's BS. Absolutely BS. It is actually cheaper, in my opinion. And again, it may be certain sectors and certain businesses that it's maybe more expensive, but for the most part, as a general rule of thumb, in my opinion, it's cheaper to buy something existing. And I'll give you a specific example, and I'll end it there, so you can, we can cover whatever topics you want. But look at for example, there's multiple franchises, whether it's a gym, whether it's a restaurant, business models. These are some business models that you might be interested in opening up. The gym, for example, brand new would cost, looking at a big box item, 10,000, 15,000 square feet, you're looking at spending anywhere between $800,000 to $1.5 million, depending where you are and how much has to be built out, the equipment and everything else. Okay, what the facilities look like. But on the resale, that club is going to probably sell for less than $500,000. Just generally speaking, just averages in terms of the cash flow that they make and what they've already produced for the existing owner. You can buy one of those for less than $500,000. So it's clearly smarter. Same thing for a restaurant. If you start one from scratch, you're talking about $250 on the dirt cheap end to probably $450 on the very high end, but $350 probably might be the average. And if you're assuming the cash flow of the business is even $100,000, you could probably buy that one for, depending again, $150 to $250. So you're coming in at $100,000 to $200,000 cheaper or even more in buying that business. Again, looking at it, maybe an average income of a sellable restaurant. So consistently, and by the way, not only is it cheaper, but again, the work's done for you. You're making money day one, and you don't have to worry about recovering all that months down or years down the road.
Absolutely. So definitely a lot to unpack in all that we talked about, which is great. This is what we want to go through. So I want to start on the selling side, since that's where we kind of started, and I want to kind of go through a couple of things. So we talked about having our finances in place, and I kind of want to start there. So we gave some ideas of keeping records, making sure you're profitable, and bookkeeping and such. So let's kind of go into a little more detail on those things. So when we say bookkeeping, are we let's talk about the things that they're keeping track of in that bookkeeping. So does that make sense?
Yeah.
Okay.
So really, so I'm going to give you just one rule of thumb. Everything that's related to the business, if you spend some money on something that you need to operate the business or grow the business, then that's a relevant business expense. You have to keep track of those expenses. you have to properly categorize those expenses. Okay. So by the way, I see a lot of businesses, small business, their books are all over the place. I'm going to take a side step for just 1 second on the books, on the bookkeeping in terms of expenses and categories. When I see all these small businesses tax returns, they're doing the tax return. And most small business owners, by the way, and you can imagine this if you don't own one yet, you can imagine that no one got into business because they're counting beans and they enjoy bookkeeping. Nobody wants to deal with that administrative crap. Nobody enjoys it. Nobody likes it. You want to do whatever you're doing. You want to create content. You want to be the physical therapist. You want to be the whatever, right? The auto body guy. You're not trying to sit down and do books. And the categories are very important because sometimes they get wonky. You put expense into a category just because it's a tax deduction. But make sure when you track all of your relevant expenses, okay, categorize them properly. The importance of categorizing them is so that you have in my opinion, not a financial statement that helps you reduce your taxes. Very important, okay, comment and tip. You want to create financial statements that helps you create a dashboard. So if your business was a plane, you have a dashboard or steering wheel that you can actually guide and drive this plane, fly this plane, okay? If you don't know what's up or down, you're just flying blind. And so you need to know, for example, where your costs are. Are you spending a little too much on employees or payroll based on your revenue? Or is your overhead occupancy cost not right? These are things that you have to constantly keep an eye on. Occupancy is going to be a little tough because you're locked into a lease typically, but there are things where there's cost of services or sales or cost of goods sold, and other things that you can possibly track. But in any event, you want to categorize those, make sure they're nice and clean. And then income, when you should also track income, you should also think about categorizing your income so that you know which customers are more profitable than others, for example. Just an example, right? Just understand the quality of your income. And I know this is just that statement may not connect with some people. Like, well, income's income. But no, I mean, you want to look at the income and say, okay, I can give you two identical businesses, and this is where value changes, for example. I can give you two identical businesses. Let's make them both laundromats, like make them both making $150,000 net, and no one shows up. That's great. But this one over here has their revenue comes from a 3-year contract with a military base. And this one is located in a really rough neighborhood. It's open 24/7, and it's very transient population. Which one do you think is more valuable, right? The quality of this revenue and the security of that future income and the lifestyle of this one is so much better. So you need to look at that. What does that mean if you're a business offering accounting services or if you're selling products in retail? You know, what that means is, for example, if you want to break down retail, you might want to break it down by SKU or by category, right? If you're in toy section, if you're in paper supplies, if you're in perishable or food, for example, you want to be able to see where those sales are, because if you're making more money in a certain area and that's very low margin and you're not doing much on this end, it's a high margin and you see potential, then you might want to start changing your advertising spend. This allows you to make management decisions in your business to make it more profitable. And these customers, by the way, may be better customers, easier customers. There's no complaints, there's no callbacks. It's just come, go. And in fact, they may even be recurring revenue, which is another value in that type of customer. Whereas if they may be coming back for, you're running on milk and eggs, whatever. But these over here may be the difficult ones. They complain, they bring returns. These are things you need to be aware of. You just can't go by, finger up in the air. I have a gut feeling that this is doing well, this isn't doing well. So that's what you should be looking for in your bookkeeping. And we call those financial controls, putting in place systems to be able to capture that. And you can do those. There are ways to do those pretty easily once you set it up.
Absolutely. So that's really awesome. I love the examples. I love the breakdown of it. Really helps you understand exactly why it's important when you're looking to sell. I like the part about the different value and the different things as well. So that kind of leads into that second part of the finances, where profitable, having your company be profitable. So when it comes to selling your company, what's that definition?
Yeah. So listen, if your business provided a living for you, then someone else might be interested in that living as well. So even if your business made you only $60,000 a year, $50,000 a year, and it provided a living for you, then someone else might be interested in it. Listen, the price is going to be adjusted for a $50,000 net income business, or we call a cash flowing business, versus a $500,000, $500,000 cash flowing business. Clearly, the valuation is going to change. That's a different issue. But if you're talking about profitable, meaning what's sellable, listen, even there are rare occasions where even the business can make almost no money, and there are some things that are sellable, but those are far and few between. And you have to have something there that shows potential. I mean, for example, there's some places in New Jersey, I mean, like Jersey City, for example, the waterfront. We've worked up and down the state of New Jersey, Pennsylvania, Delaware, Maryland, and something we refer to as key money. So they literally be making money that matter. Someone's willing to pay. I think the highest we had was $250,000 just for that lease. They wanted to be in that location. They wanted that space. So you may look for other things that are valuable in your business besides the income, but generally speaking, you should be able to make something out of the business. And it doesn't have to be that large. We sold it wasn't me, actually, another colleague in the office. I think the lowest sale business was a $10,000 business. It was a kiosk in a mall. The inventory was $10,000. Basically, the value of being sold with the inventory is $10,000. It all went to commission, but the purpose of that person selling was he really wanted to get off the lease, and he had some other pressing issues. And he obviously knew wasn't making much money. Again, as an example, like how low can you go? We're just trying to help everyone, and it's usually best to have a consultation, talk about your business, and get an honest opinion about whether it's sellable or not.
Absolutely. All right, cool. So some things that stood out is, first and foremost, having a profitability be the definition of the company has income. That income is whatever number, but having an income of like a cash net is one definition. But another one is having assets or things that are sellable. So that's good to know. So, yeah, and then the last advice of talking to someone about it is also good, because if you fall into one of those categories, or maybe you're, like the kiosk guy, just looking to get rid of a company, there might still be avenues to pursue. So that's really cool. So the next piece under selling that we had was the lifestyle, and we kind of categorized some of those things as having some systems, a reputation, models to follow. So I want to kind of talk a little bit more about, if someone's looking to sell, what is a picture of what those systems need to be doing? Because everyone in a company might think that their systems are good, or might be working right, or might be flowing correctly in their head. And I know some owners even get to the point where if they left, that system might not work, but the system works for them. So I wanted to kind of talk a little bit about clarifying, like, what a good system would be, one that like someone might actually be able to take and leave. We can go through examples of businesses if it's easier to kind of represent that way.
When you say systems, can you be more?
So like systems or models. So like, let's say, I say systems, but let's say sales. So someone, like, what's the system that they have from lead generating all the way to, client or out the other side if they're buying and leaving? That system that they follow, what do we want to define as one that would be marketable or sellable, as opposed to one that might work for someone else? I don't know if that makes sense.
Yeah. The system that, again, allows you to be able to walk away and come back and nothing's changed, right? So it allows you to operate the business almost semi-absentee. I don't believe in absentee businesses, but semi-absentee I can agree with, and that's the term I would use. So if you're able to be in a different state and you're able to monitor from your phone, great. You can use your camera to see if anyone's stealing. If you have a system to track your customers, to collect their contact information so that you can market to them in today's day through email or text messaging or SMS marketing, or even social media marketing, continuing with that. Or even somehow, sometimes you can cookie them and track them, and and have retargeted ads. So there's a lot of ways of having a sales process that takes you from bringing them in to selling them and closing it. But I don't want to be pessimistic here, but just realistic that existing business owners, and I just recognize this from experience, existing business owners created the lifestyle that they like for their own business. And especially when it's small, even to medium-sized businesses, if they don't want to do, for example, if they don't want to have a electronic POS system where people check in and pay and then does all that stuff and collect information, but they'd rather do a paper check-in and calendaring, scheduling system, so they can, they're not going to take this advice in this conversation.
Mm-hmm.
But just realize that for a buyer, where you have to recognize that, okay, if they didn't put certain systems in place and they're still making money, look at it as an opportunity. So we're not going to change anyone's the way they operate their business. Honestly, I've consulted for many, many, many years on what someone may need to do to improve the value of the business. I know how hard it is once the heart is kind of set on something different. They don't really have the energy to do something they never liked in the first place. If they're not very tech, they're not going to install a CRM system, a contact relationship management system, actually start tracking leads and selling leads. They're not doing any of that stuff. And that's okay. That's perfectly okay. Continue doing what you do it very well. If there's some easy buttons for you as an owner that you can push on, then push on that button, show the potential by doing it. Don't just say it. Hey, you can do this. That's just pie in the sky. Push the button, show it, and prove it. From the buying perspective, just recognize the business doesn't have to be perfect. It doesn't have to have all these systems in place. In fact, if you're comfortable with a lot of those things, then that's the opportunity, because that's when you're going to come in and say, look, they were doing this hand-to-hand combat, paper and pencil, right? But now you can bring an electronic system. I don't care if it's MailChimp, anything, right? Any type of tool to help you go from one to many and say, hey, new offer today, come in, today, 20% off, whatever, to get that traffic, rather than, what are you going to do, phone call someone or manually reach out to people? It doesn't obviously not as effective. So I know I didn't directly answer the question, but I want you to be aware that for the value of those who are listening, the business owners are going to continue doing what they're doing. That's fine. Again, just do the things that are easy for you to grow the business and get that done immediately. And then do what you need to do to immediately just get it, again, that's what we do. We will promote the business and market it to qualified buyers. And then just a little coaching on the buying side, what you're looking for in those businesses. Clearly, if the business owner has already set it up where they're never showing up, they come in 2 hours a week, 10 hours a week working on the business, then that's a very transferable business. That's a semi-absentee business.
Yeah.
It'll take minimal time on your part. And you can even keep your job and own another business on the side. That's quite possible.
Yeah.
Very, very often happens, yeah.
Definitely. All right, cool. So, having those systems or models in place when you're coming in from a seller, like the fact that it's working is obviously the first and foremost. But a question that I would have as a follow-up is, would one that has more of a modern way of running things as opposed to maybe old, in the example you're talking about, like writing and or keeping it digital, the value, would that be different between the two?
There could. Usually there is a difference in value, but there's a possibility that there is no difference. So someone we have as a business currently, and it's all like a paper and book ledger, but very detailed accounting, and everything's off the bank statement. So it's all verifiable, it's all clean, just more of a manual process. So if it doesn't change anything, except that a new person might bring in, again, QuickBooks or Xero or whatever they like to use, to kind of continue from there. So that's not going to impact anything. But when you're a purely cash business and numbers don't match up, and however you want to put it, and you're not making all the deposits into the bank account. You're putting just enough to pay the checks, to cut the checks out. We don't know what's real. And there's a different process that a buyer has to go through, and the seller has to be prepared to validate the true income of the business. So yeah, that's going to impact the willingness, not only the price, but also the terms. That all cash business and nothing matches up, depending on what type of business it is, someone's not willing to put all cash up front. They need some terms. They need to say, hey, you're going to have to hold something here. We need to make sure we're both got some skin in the game here. Whereas everything's clean, everything's nice little, hey, here's a report, click, click, click. You can audit anything you want, check the bank statement, look at the check. I mean, that obviously someone can be more comfortable paying the entire kit and caboodle. There he goes, close this out at closing, paying a dollar amount.
Yeah, definitely. That's very, very good. So now let's kind of go on to the buying side of things. So the first thing we talked about was evaluating. The buyer needs to evaluate themselves as a person and really figure out who they are. Do they really want to get into this? What kind of company would they fit well with? Can they manage being individual? I want to kind of go a little bit in depth of, let's just start with, what should they evaluate about themselves? And we talked about a couple, but when someone's thinking, I want to buy a business, what should they think about as who they need to be to get into this and be successful?
Yeah, so I think the first thing is, of course, the burning the desire, right? You're passionate about something, and it's not working out that way in your current income situation. So that's number one. And tied to that is, again, that you're almost unemployable. Yeah, you do a great job. Hopefully you're doing a great job, and hopefully, seriously, hopefully you're giving your best at your job. You're not, what is it, quiet quitting, okay? Because I think that's just not fair, right? I mean, but in any event, because that's just my motto. I mean, if you show up, you're doing something, give it your best. You said you're going to do a job, do the job. And that's how we try to do that for our clients too. But in any event, if you just know you're not employable, look, you're just not happy in a job. You want more freedom. You want no limits on your potential and your income, and you know what you're worth, and you know your potential. Then that's it. It's really, and what I just said has to be unpacked in multiple aspects, right? So when I say your worth, that means you've produced. You can't just say, hey, I'm not employable because I don't like to work hard. And therefore you're not employable. And therefore you're like, you know what? This is bullshit. I want to do my own thing and nobody can fire me. I just want to, but if you're lazy, don't get into business for yourself. You're not, the potential for income is very low when you're not producing anything. And honestly, you know what? I'm just going to get on my high horse for a second. I never said this before. This is the first time ever. I'm going to put it this way. If, again, when I said you've already produced results and you've already proven yourself, that's because you work for someone else. When I was hired by someone to start his business from a kitchen table, I was in law school, and I was trying to wrap up, and I was like, just helping the person out. But I came in part-time, and I grew that business, helped to grow that business. Within 6 months to 12 months, we were in an office building. We acquired it. We had employees over 5 states. Okay. And then within another year, I think we had 2 buildings and I forget how many employees over the country, a sales force and all this other stuff going on. And we just grew. I mean, so I was a humble servant for someone else. I produced for him. It was his business. I didn't feel jealous in any way. Just I produced, and it was very successful, and I knew what I could do. And I knew that, if I went out on my own, I wasn't going to worry about it. So you have to have that experience. Those life experiences are critical, right? So you have to have some evidence that you've done it. You just can't say, I know some people I've talked to have friends this way or family this way that, maybe they say, oh, I want to do this. They got the hustle, they got the excitement, but they never took action and never, ever did anything, either for their employer or for themselves on a side hustle, nothing. Then I would be a little nervous about, you stepping out and putting everything you have into something that may not be the smartest move. You understand what I'm saying? I think So let me be also a right now, and I never said this before either. Let me be a proponent for intrapreneurship. So I think that's the term. So entrepreneurship is where you have your own business. You went out on your own and you built your own house. You built your own business, right? Entrepreneurship, if I'm using the term correctly, is where you are an employee, but you're very entrepreneurial in your role. So you're adding value and say, look, let's innovate here. Let's do something here, right? Let's add this, or hey, customers need this. Let's roll that out. Please don't act like, oh my God, I got $1 million idea. I don't want to share with anyone. No, this is an example where if you provide value to your employer, you're going to be successful. You're obviously going to get compensated. Nobody's going to leave you out in the dust. When you're that valuable, they want to keep you. They want to pay you handsomely. And they're going to elevate you and give you a responsibility. Eventually, you may be that good. You're that good. You're going to be taking over that business. But if it doesn't work out, obviously, you can take that real life experience and take it out to the real world. So again, when I talk about being passionate about something, you just have that itch that you can never stop, and you have transferable skills. This is what I'm talking about.
Yeah, definitely. Makes it very relatable and stuff as well. And I think that you're right that a lot of people, they get excited about the idea, and then it's a matter of like, are you still excited about it? A month later, are you still excited about it? Because it's not like getting a job where you apply and then you're there, you have your list of things and things like that. Like when you own the company, even if you do have other people in position, say as VPs or CEOs or whatever, you're still going to be, especially in that beginning of owning that business, very involved with all the different positions, very involved with getting a grasp on everything. And then as everything starts getting together, then you can start having people solely do their positions and all that kind of stuff. But, so there's a lot that goes into it. And I think if you're not mentally prepared for that, it can be a downside. So with that, let's talk about the other part of that, getting yourself ready as a buyer, which was being creditworthy and having cash and that financial picture when you're a buyer. If someone's thinking of buying and say they're motivated as hell, they're experts and maybe in that field, when it comes to the financial picture, where should they be, to be like, okay, I can afford this business as well?
Yeah. I just simplified that a little differently last week with one of my own business brokers internally. And I think this might work. So if you decide what you want to make in income, net after debt service, as a business owner, what makes you happy? What's at least comfortable? And then, of course, the range above, right? You want to always go better. It doesn't matter, but there's a limit to the bottom. Let's say that you want to make a minimum $60,000 a year so you can leave your job. Then that's the dollar amount you need to have cash saved up. And without going into the complicated how that math all works out, there are a couple of options. So if you have really strong credit and really good experience in the area that you're trying to build out a business in, and you had $60,000, then that could be anywhere between 10 to 20% down cash injection on an SBA financed deal, acquisition. So you can buy a business through the SBA program with as low as 10%. So we're talking about $600,000 acquisition, but more likely a $300,000 acquisition. More likely, of course, $300,000 acquisition. And that business itself would probably make more than what you're looking to make as an income, even after the debt service. And I know there's a couple steps to math. We don't want to get into to the weeds of things unless you want to, but that's just how it works out, I think. And so, even a $60,000 business, their multiple might be a one-time multiple anyway, or a 1.5 time multiple. If you want to do all cash, I would say, if you're going to do all cash, then I would say you should have enough money to consider, please, write this down, right? You have the purchase price. You also have to have more cash to cover working capital, keep the business liquid, right? You don't want to be dried up and you can't pay the bills before you make the income. because of cash flow issues. That's a problem. So you have to have working capital, and you should have money to invest in the business, whether it's to improve things, because you want to obviously do better. So if you want to update or clean things up or add a new thing, new system, right, that makes things better and easier and faster. If you're in a restaurant or cafe, you want to put that little cappuccino machine with a relationship with whoever, La Cologne or whatever, and hey, I have better coffee. We have this, that, the other. It's easy for the employees to do, right? It creates high profitability, high margins. This is an added product line or service line to what you do in the business. So be prepared for that. So cash to buy, cash for working capital, cash for capital improvements. And I'd probably even say this, to be ultra safe, have your own living expenses separated. You're buying a business that makes already cash flow, yes. But if something happens because COVID, you name it, right? Listen, I don't want to scare anybody, by the way. I shouldn't have said the bad word. I should have said that. COVID hopefully won't come back for another century. Okay. We already know history teaches us stuff, right? Like, this is pretty radical. We shouldn't be worried about that again. We really shouldn't, in my opinion, really. I think we need to get back to normal. And mostly because, honestly, like, let's be all real here, right? I mean, we already know, like, how often that happens. So, but even in a small thing, if you have a health issue, whatever it is, something happens, you can absorb that hiccup. So that's, but there's the two things again. If you've got good credit and good experience in the arena, you can get financing. Oh, and I'm not sure if this really works, but have whatever cash flow you want to make, have that dollar amount saved, and start with that.
Yeah, no, definitely very good breakdown of that. I think it made it very simple to follow, and I think that when it comes to a person thinking about buying a business, they need to understand, if they don't already, the full picture of what they're getting into, how it's going to take time to get yourself acclimated to it, get that income coming back in, even if it's already, quote, making money, and really delving into, that understanding itself. So the other part too, with having, things that we need to navigate, like COVID, or, back in 2007, 2008, that, we had another big incident happen that really affected businesses. And I think that it's not so much what's going to happen. It's a matter of understanding that, when something does happen, because there are things that'll come up, whether it's just industry specific, like if you own a school and teachers go on strike, or if you own a warehouse and the people go on strike, like, all sorts of things can happen to combat yourself as a business, which is why, like you said, you want to have yourself prepared financially for things like that. And then also, if you have a knowledge in that industry already, you might be aware of those hurdles that you would run into. So another example being like the microchip shortage, it affected the cars. So, all those things are going to pop up regardless, but being prepared for it is something you should always be thinking about all the time. And then being able to adapt, to what that is. And, how are you going to change? So for a quick example, during COVID, there's a video game guy who has like the old retro video games and stuff, and he had to close his store, but he just started selling things online. So it was a simple switch, but that's an example of being adaptable. Instead of trying to get people to come into the store, he just used his network and started just working online and selling his inventory there. So, that's an example of what we're talking about, being adaptable. So the last thing I wanted to talk about, which we touched on, was, buying a business can be cheaper than starting a business. And I agree with you on that. When you look on your cash involved, even maybe energy involved, it's going to be easier to make that purchase. The downside might be you can't make it entirely your own. Maybe you have to follow, what the other person does. And if you want to bring your own character in it, you have to, apply it over time. But I wanted to kind of go in depth about that concept and some of those differences that we have, just like I mentioned. So
I'm sorry, what was the last question?
basically go in, I want to kind of compare compare the two. So, if you're starting a company, you get to be creatively involved from the very beginning, but you also have a lot more cash to put into it. Whereas if you buy a company, it could be cheaper on the cash side, but you also might be walking into something where you have to kind of work through whatever might be already there to potentially, quote, customize it yourself. So things like that is what I want to kind of get into.
So you want to go into more detail in what it looks like. So
Yeah, what are some differences?
Okay, so when you're starting a business, look up information from the SBA. They have a lot of stats on startup businesses and the success rates of them. And apparently, after 1 year, how many of them close the hell and how many of them survive? Survive 2 years, 5 years. It's very few will go to the 2 to 5 year range. It's very few. What you're doing when you open up a small business is you're paying money to get yourself an education because you got to go out there and try it. It's a lot of trial and error. So you get the opportunity to try and get it wrong and then try it again and get it wrong and right and keep going that way. Listen, I think if you're an entrepreneur, you already have a certain level of confidence in yourself and your abilities. But I'll tell you that's frustrating and it's time consuming. It really is. It wears you out. I've done both. I've done both. I've come into an existing business and ran it, and I've started from nothing. And I got to tell you that, generally speaking, without a doubt, in terms of how much time it takes, how much frustration it takes, the thing you mentioned before about not making it your own, like that's being a negative, it's actually not true. If you're taking over a cafe and you want to make it your own, as long as the or auto body shop or whatever, or the salon or I'm just trying to think of some examples, flower shop, we have for sale, or even we have a web-based service business in the real estate sector right now for sale. There is so much more room to take it into different directions. So you keep your customer base, you do what nobody's there, but then you take it to another level. So if you don't like the colors in the walls in the office or the building, no big deal. Refreshing it up, giving an update. Nobody really cares about that too much. That's your fingerprint. If you don't like the way certain things are run, a certain process, it frustrates you. Clearly, you're going to roll that out and make it better. No one should ever complain about that. But I would say roughly a month to 6 months, you kind of want to keep things even keel, status quo and then you can, the easy things you can make changes where everyone's complaining and you agree, you can make those immediately. And that's the type of energy and momentum that you can get on top of what already's there. Whereas if you're starting from scratch, what are you going to do? Most times you're starting by yourself. So you're doing everything. How can you, it's very hard to grow and leverage you. You got to go hire. So we got to figure out, well, when do you hire? Are you making enough money to hire someone? If you then go spend money, what are you going to do? Hire someone, pay money out of your pocket. You don't know. Now you're banking on an individual. You're not banking on a business with established systems and process. But however bad it is or however outdated it is, it's still making money. It's already set up. Everything's just running. So, these are things like, if you really think about it, if you really kind of walk through it, it just doesn't make any sense. There's nothing about, unless again, look, if you're developing, you're a coder, programmer, and you're building things, then obviously by all means you're building out a beta, you're building out a minimal viable product, an MVP. Okay, you're rolling that out, testing it against the market, seeing if it gets traction, then leveraging up investors and things like that. And yeah, that's a totally different story. You have to build because there's something that doesn't exist that you want. So that's different. But when you're talking about something that's already established, that's not going anywhere. Listen, if you have a laundromat, COVID, you need to wash your clothes even more. And you just have something to limit whatever. You still make money. They still made more money through COVID. So nothing for many businesses, nothing has changed. However, be aware of that too. Like what sector you're getting into, but you should already know, you should have experience with it. If you're starting from scratch, or if you're buying something existing, you should know where those warning signs are and, be able to defend against it. But I hope that answered the question in terms of the prospect of you starting a business when it's just you, and just a simple question of when do you hire? That's always a tricky one, right? It's always tough,
Hmm.
and that's very stressful. But I think when you already have employees and you can just swap the employee out, that employee is not a good fit, is not doing very well, and you have someone who's even more talented, or you can bring family in that's going to work even harder, then by all means, you just know you're going to make it better. You have the breathing room you need. So,
Yeah. No, that definitely touched on a lot of differences between the two, and I think that was the main gist of what I was going for. Showing the benefits of buying as opposed to just simply trying to start it yourself. So,
oh, can I also mention too the opportunity cost, right? Like, do you
yeah.
lost revenue? Like, if you buy an existing business and you're making money day one, where over here you're putting money into it and feeding the monster
Hmm.
until one day this thing grows up to give you something back and lay an egg for you, right? Like right now, it's a ugly looking monster. Like it just keeps taking. You got to think about all that time where you were not making money, and then you were actually making money, and then put all that time together and realize that that's a huge delta in terms of the opportunity cost too. So, and look, if you just don't, and this is the other issue, if you just don't understand how to go about finding a business to buy or how to go about negotiating a deal or closing on the deal, that's why we're here. We actually do buy side representation, just like we do sell side representation. And we've actually done quite a number of transaction broker relationships where both parties say, look, we need help, someone help us facilitate this. We don't know what to do. We need to get it closed. So can you help us with that? And absolutely, we can help with that too. So, that's what we do. That's what we're here for.
Absolutely. Awesome, man. I really appreciate your time. I definitely think we went through a lot that people need to understand when they're looking to buy or sell. And obviously, if you are looking to buy or sell, get a hold of Orlando, because it's really going to make it move smoothly for you. So, Orlando, thanks again for giving us your time, and I really appreciate it.
You're welcome. My pleasure. Look forward to interacting with some of the people who participate in this program.